Terry Blackburn here. I have a property portfolio worth over £10 million. I've built and sold multiple companies, some in seven-figure deals. I wrote two successful books, one won awards all over the world. All of these awards behind me are national and international awards for some of my companies. Coach people one-on-one, and I run masterminds. Now, if you like what I talk about in this session, if you listen to my podcast, you follow us on Instagram, you follow the YouTube page, if you like what I talk about and I resonate with you and you can relate to me, jump on my website, which is terryblackburnproperty.com. All of the different services that I have is on there. I'd love to work with you and I'd love to help you get to where you want to be, whether that's in property, whether that's in business, whether it's in sales, goal setting, whatever it is that you want to achieve and want to learn. I'm your man. Enjoy the rest of the episode and speak soon.
Hi and welcome to the Rags to Riches show with myself, Terry Blackburn. So today's episode is all about if you've got 50 grand or less, what you should be doing if you want to get involved in property. I've got some tips on this and I've got some strategies that you should be using if you don't have too much capital ready to deploy into some investments. So let's jump straight in. One thing to point out straight away, I know I've got listeners in London, I've got listeners up north, I've got listeners all over there's Dubai and all sorts of places. Realistically, let's just call a spade a spade. You aren't going to be able to get anything in London for 50 grand, obviously. You're probably going to have to go to a location with a lower price point. Of course, probably up north. I'm biased because I'm from Newcastle, I love the northeast, but it's a fantastic place to buy. You'll get a great return on your investment, a great return on your capital, and the barriers to entry, the purchase prices are a hell of a lot less than obviously somewhere like London or Dubai, right? So I'll be going to a lower price point location, maybe it's the northwest, maybe it's the northeast, Scotland as well, yeah? So if you've only got 50 grand or less, then you've got to just accept that. You can't be buying something in Canary Wharf, obviously, it's not going to work. So you're going to be using mortgages. You're not going to be buying anything cash at 50 grand. You want to be using bridging loans or mortgages and be putting down a 25% deposit. So in terms of property strategies, there's a bit of advice on this. So ultimately, if you've only got that much, and I say only in the nicest way, I'm not trying to discredit 50 grand. It's still a lot of money. But if you've only got a limited pot, then you need to be doing buy, refurbish, refinance, BRR, buy something below market value, do the work to it, force the value up, and refinance to pull that money back out. You need to be doing that or flips if you have a limited pot. You can't just be putting that 50 grand into an asset, a buy to let for example, where the property's already maybe done and you can't force the value up. You're locking that capital in. That's better than having money just sitting in the bank because you're not getting a return from it. But at least if you're putting it into an asset like that, you are locking that money in and then it's kind of locked in. And you're relying on cash flow and capital appreciation to get any of the money back, right? So for me, I don't think that's the wisest move if you've only got 50 grand or less. Whereas if you're doing buy, refurbish, refinance, you're going to put your 50 grand in or however much it is, deposit, refurbishment, and then you're going to refinance because you've lifted the value and you're going to pull that money back out, yeah? And then you're going to be able to get your 50 grand back and go in the next deal, and you're going to recycle the same deposit over and over again. So that's buy, refurbish, refinance. If you maybe can't find any of those deals, an easier way to do it is flips. So you're going to put your 40, 50 grand, whatever you've got, into an asset. You're going to buy it with a mortgage. You're going to refurbish it and you're going to sell it on at a profit. Then you might make your 50 grand into 75 grand. Then you'll put your 75 grand into a deal, you make it into 100, and you start building your pot like that. Now, if anyone says that they can't find any of those deals, they're full of shit in my opinion. There is absolutely loads of these deals. I've done 6 of these this year. I normally do a deal a month. This year has just been a little bit different with the kids and stuff. I've been pretty busy. But these are on market. I coached over 30 people, and most of them are finding these deals as well because I'm teaching them exactly how I find deals. It's not that difficult once you know how. But if you're telling yourself you can't find deals, that normally becomes your reality. There are plenty of flip deals. There's less BRRs than flips, but they are still out there. I've done 6 flips this year. I've done 2 BRRs, which are HMO projects, where it was most of my money in, most of my money back out. So they are out there. I've found deals in North Wales and in the North East. They are there in different locations. You've just got to look for them. You've got to know how to look, and you've got to put the time in, ultimately. So if you have less than 50 grand, they're the strategies that I'll be using. Will be buy, refurbish, refinance, or flips. Or a third alternative would be some sort of joint venture. Maybe a flip. I wouldn't be doing a buy and hold strategy with a joint venture partner, but I would be doing a flip with a joint venture partner. Maybe they put most of the money in and you do all of the work. Maybe you split how much money you put in and you split the work. However you structure that. But if you don't have enough, you maybe want to, if you don't have enough to buy a property deal yourself, you maybe want to joint venture with somebody else, put some of the money in each, split the workload, sell the property, half the profit. That's an easier barrier to entry if you don't have too much capital. But at least it gets you started, right? But what I wouldn't be doing is I wouldn't be buying a property and holding it and collecting rent when you've got a joint venture partner, because it can easily go wrong. Time and money changes people. You might change, they might change, you might fall out. Disaster. Yeah? A flip joint venture is much easier and much more sensible, in my opinion. Other things that you can do if you've got less than 50 grand, you could definitely be getting some education. Now, education might be a couple of £1,000. It is not a cost. It is an investment in you and your future. And let's say if you don't know too much about property, you haven't done a course or had mentoring before, and you spend 50 grand on a deal, what happens if you get that wrong? What happens if you make a mistake that a mentor could have helped you avoid? Then that 50 grand could go down to 40. You could actually lose money, never mind make some money. You could make a very costly mistake by rushing into it from an uneducated place. So books, podcasts, courses, mentorship, masterminds, all of that type stuff is a worthy investment of some of your capital, because the lessons that you learn, as long as the mentor's good, like me obviously, there's plenty shit ones though, as we know, you just see them online. Like, as long as you're getting good advice, they're lifelong lessons that will stick with you for the rest of your life and the rest of your investment journey. So look at mentorship and education as an investment in your future, not a cost. And if you've got a limited pot, I would strongly advise doing that, because the fact you've got a limited pot normally means that you're not that experienced in property. So education, I would say education before you do any form of investments, because ultimately you need to know what you're doing first. Listen back on my podcast. I've got books, as you know, the Be a Lion book. There's Rich Dad, Poor Dad. There's plenty of property books and property podcasts you can listen to learn. Go to some networking events, do some courses, mentorship, get some knowledge before you do it. Would be wise, so you don't make mistakes. Everyone still makes some mistakes, but you're going to reduce the likelihood of a massive mistake by getting some education first. So make sure other tips, I suppose, is make sure you've got a good mortgage broker. Make sure you're building some good relationships with people like builders, solicitors, mortgage brokers, estate agents and stuff before you jump in, because that's important too. You don't want to get ripped off by overpaying for a solicitor or overpaying a letting agent or a estate agent or a builder. You want to make sure you've got a bit of a team behind you before you jump in. So that's my advice. If you've got 50 grand or less, what you could or should be doing: make sure you're buying in an area with lower barriers to entry, like up north instead of down south. Use strategies like flips, joint ventures, and buy, refurbish, refinance. Make sure you've got a good team around you: banks, builders, solicitors, mortgage brokers, tax advisors, all of that. And make sure you've done some education before you jump in. And just to summarize as well, like, don't overanalyze this. Yes, it's an investment. There's always going to be risk to any investment that you do. So don't overanalyze. When you overanalyze and you overthink, what ends up happening is you don't take any action. You're looking for the perfect property deal. Like, the perfect deal is not out there, right? You've just got to have some education, know what you're doing to a degree, and jump in. Not recklessly, and don't do anything stupid, obviously. And don't blame me if you get this wrong. You've just got to do something, right? Some activity, some action is definitely better than none. So that's what I would do if I had 50 grand or less. I hope that helped. If you know somebody who maybe wants to get into property, but they're stalling, they're procrastinating, they're just not taking any action, or you know someone who's got some money and they're just looking for the best deal, send this podcast to them. It'll hopefully help them, just like I've hopefully helped you too. And don't just take notes, take action.